Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, February 12th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. The first chart that we're going to look at is a one-day, one-minute candlestick chart of the S&P 500. So this is just today's trading, and of course today is Friday, February 12th. The S&P 500 on the 12th was up 47 basis points, and we closed right at the highs of the day. I mean, just incredible, and we'll dig into the chart here in just a second, but just absolutely incredible trading again. And this is another new all-time daily and weekly closing high for the S&P 500. We closed at 3934.83, and you can see we closed almost to the penny, right? Just a few points off of the ultimate all-time high in the S&P 500. So absolutely incredible. Again, closing at 3934.83. But what we can see here for Friday is we opened up a little bit lower. Now, keep in mind that the dotted blue line is the flat line, right? This is where we closed yesterday. So we opened up a little bit lower than where we closed yesterday. So we were slightly negative. And then just after 10:30 this morning, we had a push that pushed us into the positive zone for the day. And then we really traded kind of sideways to slightly down, went negative for a little while after 2 o'clock. But all of the gains really happened today from 2:45 until the close. And you can see that once the market got moving just slightly before 2:45, it just kept in this nice uptrend and again closed really right at the highs of the day, up 47 basis points for the day. The next chart that we're going to look at is a 7-day, 15-minute chart of the S&P 500. And I went back 7 days because I wanted you to see last Thursday and Friday and then this week's trading. So on Monday, we gapped up at the open, and this was the first time right here on the S&P 500 that we had ever had any trading above 3,900, which is why I have this blue line here. So this 15-minute candle right here, that is the first trading ever above 3,900 on the S&P 500, and again, that was on Monday the 8th. And then you can see that for the balance of the week, we just kind of traded sideways, got a little bit higher, right, around 39.30 or so, pulled back, and then from about 2 o'clock on the 11th, on Thursday, until where we closed here, this is where all of the progress was really made for the week on the S&P 500. So closing at the highs of the week gives us, again, another new all-time daily and weekly closing high on the S&P 500. The next chart that we're going to look at is an hourly candlestick chart of the S&P 500 that starts at the end of 2020, because I wanted you to be able to see what has happened since the very first trading day in 2021, which was January 4th, and you can see this blue line here, which is 3,700. So we started off at 3,700, and we made our way up to this top blue line, which is 3,860. And then you can see we traded around that 3,860 level, kind of hitting our head on that level where it acted as overhead resistance for several days in the third week or so of January. And then we had this sell-off that took us to the 3,700 level again. So during the month of January, we basically round-tripped right there. We started off at 3,700. We ended at 3,700 on the very last day of January. So as you can see right there, we made no progress in the S&P 500 for the month of January. But the month of February has been a completely different story, and you can see that we've gone from 3,700 to where we closed today at 3934.83, just 10 trading sessions, and we've gone from 3,700 to 3934.83 on the S&P 500. Now, if we pull back anytime soon, 3860 is going to be really our first line in the sand, so to speak. There might be a little bit of support there. There might be a little bit at 3900, but I wouldn't count on that really holding, guys. We only traded around that area for, just this last week. But 3860 would be the first area of support below where we're currently trading. And of course, if that doesn't hold, we can see here that this 3700 level would be that next level of support below where we are currently trading. But man, we have just been on an absolute tear, especially during the last 10 days of trading here in 2021. The next chart that we're going to look at is a 4-year weekly candlestick chart of the S&P 500, and this green line is the 40-week moving average. Of course, that's equivalent to the 200-day moving average. And you can see that for the week, the S&P 500 was up 1.23%, and of course closed at a new all-time weekly closing high once again, just like we did last week. Right where we're at right now, we're a little over 14.8% above, almost 15% above the 40-week moving average. Guys, that's a long ways away from that 40-week moving average. And the other thing that caught my eye on this chart is when you go back over the last 4 years and you look at this ascent angle here, okay, just kind of eyeball it, but you can see that this is a similar ascent angle we've had on a lot of these runs before the market has rolled over, okay? So look, none of us has an exact crystal ball as to when this is going to happen, right? So, I don't try to predict the future because that's a loser's game. So, be careful with anybody that tries to predict the future. But what I do have in place is a risk management system, and I encourage you to do the same thing, guys, because at some point, we're going to get a pullback in these markets, all right? And you can see that a lot of these pullbacks, when you get these, steep ascent angles, result in the market pulling back to the 40-week moving average, if not below, all right? But every time we've had one of these ascent angles, and every time we've gotten, quite a ways away from the 40-week moving average, as you see over the last 4 years, it results in the market pulling back to the 40-week moving average or below, all right? And again, you can see it here. And so even if all we did was pull halfway back, right, that's still going to be a 7 to 8% pullback. And for a lot of people, if you have 100, 2, 3, 500, $1 million in the S&P 500, which a lot of you guys do in your 401ks or whatever, that hurts, okay? I mean, you get an 8% pullback on a $500,000 account, that's what, $40,000? That's a lot of money, all right? So I encourage you to have a risk management system in place. And guys, the time to put a risk management system in place is before you need it, right? Before you experience losses. It's kind of like, if heaven forbid your house burnt down, do you want to buy the fire insurance before the house burns down, or do you want to try to buy it afterwards? Well, we know the answer to that, okay? But I'm just trying to use that to illustrate a point. So, one of the most frequent things I hear from my clients is, I wish I would have found you before February of 2020, which obviously was the start of the most recent bear market. And they go on to say that I would have a lot more money than I do if I would have found you in your system prior to February, March of 2020. All right. So with that said, guys, I'm going to tee up some information about my system. It's called Simple Market Signals. It took me over 20 years to develop this. I developed it for my own use. But after I realized what I had, and given my financial services background, I'm a former financial advisor, former VP for a major mutual fund company, been at this a long time, I realized that I could help a lot of people with this system. And so with that said, I'm bringing it, it's now available to the public, and you guys can have access to my information for a very, very modest price. And I hope you'll pay close attention to the next 15 or so minutes of this video, because I took 20 years of my life to develop something that can really help you. And I would encourage you to spend the next 15 minutes of your life learning about it, because it could make a huge difference in your life going forward. Let me ask you a question. Do you have a stock market risk management and trend direction system in place? Do you know the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the trend of the stock market? My system is Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecast, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including numerous bull and bear markets. And what I found is that certain conditions exist during various market phases, and then I created simple, easy to understand signals around these different phases of the markets. And the thing is, guys, that most people don't know about or have access to the data necessary to do the research that I had to do to create this model. Simple Market Signals is a proprietary stock market risk management and trend direction model. And Simple Market Signals is perfect for financial professionals and individual investors. There's two major components to the proprietary model. There's a risk level signal and there's the general trend indicator. Let's start off with the risk signals. The risk signals are simply green, yellow, and red. The green signal has the lowest equity risk associated with it. And what you're going to find is that most all upward progress in the stock market will be made in a green signal environment. Said another way, it is hard to make money in equities unless the signal is green. The yellow signal means there's moderate equity risk, and sideways to slightly up or down price action is very common during a yellow signal environment. The red signal has the highest equity risk, and the worst sell-offs, including bear markets, will happen when the signal is red. A quick review of the risk signals. The green signal is the best risk-reward ratio signal for equity investors, and what you're going to find is that most upward progress in the stock market will happen in a green signal environment, as we see here. The red signal is the worst risk-reward ratio signal for equity investors, and what you're going to find is that the worst downturns, including the downturn in Q4 of 18 and the bear market in Q1 of 2020, plus the bear market from 2000 through 03 and the bear market of 07 through 09, all of those are going to take place in a red signal environment. Now let's put it all together and see how Simple Market Signals could have helped you during the fastest bear market in history, which of course happened during Q1 of 2020. We had a strong stock market coming into 2020, so the risk signal was green coming into 2020 and remained green for the majority of January. We did have a yellow signal for about 2 weeks towards the latter part of January, first part of February, and then, of course, the risk signal went back to green. And then on February 19th, we hit what was at that time the all-time high on the S&P 500. Again, that's February 19th. And then things started to unravel from there. But think about this. Just a few days after the all-time high at that time in the S&P 500, on Monday, February 24th, the risk signal went yellow. And then on Tuesday, the 25th of February, the general trend indicator went negative. And that general trend indicator had been positive since October of 19, okay? So right there, just a few days after the all-time high in the S&P 500, the risk signals started to tell you that something was changing, that there was increasing risk in the stock market. And by Thursday, February 27th, the risk signal was red. And then, of course, the market sold off hard from there. So think about this, guys. I mean, you talk about stress testing my model. During the fastest bear market in history, that started just a few days after the all-time high at that time, the all-time high in the S&P 500, in 1 week, the risk signal went yellow, the trend indicator went negative, and then the risk signal went red, all in the same calendar week, actually within 4 days, right? Monday, Tuesday, and Thursday. So you talk about stress testing my model. Guys, I mean, this is the fastest bear market in history, and look at how Simple Market Signals could have helped you during that time. With Simple Market Signals, you will know what the risk level is and what the trend direction is in the overall U.S. stock market. And the proprietary model is based on S&P 500 data. The S&P 500 index really is the best proxy for the overall U.S. stock market, and it's the only index that has all of the data available that I need to run the model. And guys, it's not about beating the S&P 500. However, that is a possible outcome over time if the tools within the model are employed properly. It's about risk management and risk control. It's about controlling your risk exposure rather than letting the whims of the market dictate your future. The best fit for simple market signals is an investor or a financial professional with at least a 6 to 8 week plus time frame that they're focusing on. If you're a shorter term trader or a day trader, simple market signals may help you a little bit, but the reality is that the best fit between simple market signals and a subscriber is somebody that has at least a 6 to 8 week time frame or more that they're focusing on. These signals are delivered to subscribers in our weekly emailed newsletter. As part of the Simple Market Signals weekly newsletter, you will receive the proprietary risk level signal and charts on the overall U.S. stock market. You will also receive the general trend indicator signal and charts on the overall U.S. stock market. You will also receive a weekly recap of what happened in the U.S. stock market, including performance information and charts. And this is on multiple investments. So we cover small caps, mid caps, large caps. So you'll have a great idea of what's going on in the entire U.S. stock market across all capitalization. You will also receive technical analysis data and charts, so things that are interesting and educational that I think is important for you guys to know will be included in the newsletter on a weekly basis. You will also receive fundamental analysis data points on the S&P 500, so we look at potential earnings per share for the year, as well as the possible PE ratios, and then price levels looking out to the end of this year, and then I generally go out to the end of the next year as well. So you'll have great fundamental analysis data to work with on the S&P 500 right at your fingertips every single week. You will also receive yield curve information and data points. So we look at the 2s and the 10s. So the 2-year Treasury note, the 10-year Treasury note, and then the spread, the differential between the 2s and the 10s. This information, guys, very few people know about it. Very few people watch this. This is so important to really get your head wrapped around because it affects so many areas of the financial markets. And you will also receive the proprietary risk level signals on all 11 major sectors of the S&P 500. So not only do you get the risk level signal on the overall market, but we also give you the risk level signal on all 11 major sectors of the S&P 500. So you can see what the risk level is underneath the hood on all of the individual sectors. And you will also receive sector performance information on all 11 major sectors of the S&P 500 over multiple time frames. So guys, you're going to get all of this, right? And it's going to make you so much more knowledgeable about the financial markets. You're going to be able to have a conversation with virtually anybody about the stock market, and you're going to be able to really understand things at a level that very few people do. And guys, you're going to get all of this for just $19.95 per month. That's less than 67 cents per day. I want to set realistic expectations. The weekly emailed newsletter isn't fancy. It's effective. It's plain text, no color, other than the charts, of course, and no fluff. But it's chock full of extremely valuable information week after week. And please note, due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. Sign up is quick and easy. Just go to simplemarketsignals.com. That's https://simplemarketsignals.com. It'll take you about 4 or 5 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an email newsletter, so we will have to have your best email address on file, and make sure this box is checked, because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system, and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. A few points to remember with respect to your subscription to Simple Market Signals. Remember that everything is tied to your email on file. Now, once you subscribe, you will get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter, so that's automatically generated from our system. And whether you see that welcome letter or not, I would encourage you to double check your spam, junk, trash, and promotion folders, especially for the first several weeks of subscription, because once in a while, our emails get automatically routed into one of those different folders depending on your email service provider, whether it's Gmail, Yahoo, whatever it may be. And I would get in the habit, I would encourage you to get in the habit of every week or two, just go out real quick and double check these different folders, the spam, junk, trash, and promotion folders, because I can't even tell you how many times I've had people say, well, I didn't get the email, and then when I tell them to go out and check those various folders, oh, there it is. So it's just, the reality of having an emailed service that once in a while, and it's going to vary from email service provider to email service provider, but once in a while, the emails from us, depending on the subject line and other things, will get automatically routed into one of those different folders. Also, I would encourage you to whitelist all emails from Simple Market Signals. In other words, just make sure that your email service knows that you want all Simple Market Signals emails to go to your primary in basket. Also remember that newsletters go out on the weekend, okay? They generally go out Saturday afternoons, but they could go out anytime over the weekend depending on our production schedule, and the next new edition will be sent to you on the weekend following your subscription. So if you subscribe on a Monday, Tuesday, Wednesday, whatever it is, the next new edition is going to come out on that weekend following your subscription. But we will also send you the latest edition, so whatever the most recent edition of our newsletter was, we'll send you that latest edition as soon as we can, but we have to manually send that to you. Generally, you will receive that within 24 to 48 hours of your subscription. So again, if you don't see that first newsletter within 24 to 48 hours, go back and double check your spam, junk, trash, and promotion folders to make sure that it's not hidden in there. Also, within that first 24 to 48 hours, we're going to send you at least 1 or 2 emails with links to training videos that are for subscribers only. So please make sure that you're looking at all of this, because it's extremely important for you to get the most out of your subscription. Please watch those videos that are part of the training material that we send you. Now let's recap what you will get with your Simple Market Signals subscription. With your subscription, you will receive the weekly emailed newsletter, which goes out on the weekends, that will include all of the content that we just talked about, plus you will receive midweek update emails when warranted. So if there's a major signal or trend direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to send a midweek update email to get you that information as soon as possible. So again, a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents a day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. To get started, just go to https://simplemarketsignals.com.